Okay, good morning. Today we're going to be moving down the balance sheet. Last week we did short-term investments and receivables. Now we're on to the next item on the balance sheet, which is inventory. So inventory is an asset, and inventory is that stuff that typically we buy and resell to customers. So sometimes we can make it and resell it, but it's stuff that we buy and we resell to customers. So when we talk about what type of account is inventory, it's on the balance sheet, it's an asset. So our answers here for this first question are narrowed down to two. So we have current asset or long-term asset. There's our choice. And the distinction between current asset and long-term asset is that a current asset is intended to be used up or turned into cash within the next year. And you look at inventory, and certainly we plan to sell it. We don't hold inventory that long. So inventory is a current asset. So this question is in Learning Catalytics. It's going to stay open for a couple minutes. I won't announce it when I'm going to be closing it. So if you haven't answered it yet, make sure you do very soon. Okay, so next up, just a reminder. So Chapter 6 homework is due this Saturday. Chapter 6, as I said, is about inventory. And before we get there, I had 2 inquiries this weekend, people asking about tutoring. So what that told me is that I buried the tutoring link too deep in Blackboard. So in Blackboard, right above or below announcements there is a link that you can get to the tutoring site for the university, the Academic Success Center. And you can find out the hours for tutoring for this class. I just did a screenshot last night or yesterday of the tutoring times offered for this specific class, and there's a lot of times at Tri-Towers and at the library. So the link is on Blackboard. I would check it because sometimes they change the hours. If that doesn't work, you can certainly contact me. Not the link will work, but if you have additional concerns, you can contact me. Yes. I don't know what I'm assuming that's over at midnight. That's just a default. I don't know. I just did a screenshot of what we're showing, but it starts at 7 p.m., so I assume it goes for 5 hours. Yeah, and I think that's just the default where their system doesn't change to AM, but yeah. Okay, so we have inventory and cost of goods sold. So inventory is on the balance sheet. Inventory are those things that we're selling to customers. Cost of goods sold is what's on the income statement as expense when we sell it. So they are interrelated. Inventory is a balance sheet account. Cost of goods sold is the income statement account. In this chapter, when we're talking about inventory, we're talking about our cost of inventory. And the cost of goods sold is our cost, our being the company that's selling the inventory. Okay, a couple abbreviations. So in this chapter, you don't necessarily need to memorize these abbreviations, but the writing will get quite lengthy if you have to keep writing it out. So I'm going to use BI as beginning inventory, EI as ending inventory, and COGS as cost of goods sold. Again, not needing to memorize that, it's just going to be easier as we go through some of the formulas. Now, my observation about the inventory chapter, there's a couple parts. There's inventory. We'll talk about inventory. We'll go through how to calculate number of units, and that's not too bad. There's 4 methods for computing the cost of your inventory, and that's what tends to trip people up. So my advice with this chapter is to allow yourself plenty of time. Don't rush through it and go through it. There's no way to just look at something and know the answer. You'll have to go through the steps and be patient. So today we're gonna go pretty slowly. We are going to go through a very simple example with like 5 t-shirts. And no, in real life we've got thousands of items, but we're going to do it with really small numbers so you can see what's going on. So let's just dive in. And today will be the simple examples, and then on Wednesday we're going to start doing some of the homework problems. So our inventory examples. So let's say we're selling t-shirts. So when we have inventory. So we started the period with 3. So we started this year with 3. We bought 2 more. Okay? So we have, that's actually beginning inventory and purchases in accounting terminology. But how many are available for sale? Well, the available for sale are those 2 items added together. Everything that we sell has to come from one of 2 places. We either had to start with it, beginning inventory, or we had to buy it. So we have beginning inventory or purchases. Those are the 2 places. So when we're answering this question, we have 5, right? So we had 3 we started with. We bought 2 more. We have 5 available for sale. We are doing units only here. So this first part of this conversation is about number of units. Okay, so let's say we sold 1. So we had our 3 we started with. We bought 2 more. We had 5 available. We sold 1. How many are left in ending inventory? I think most everybody can agree that it's 4, right? Because we had the 5, we sold 1, we have 4 left. That is the basic fundamental equation we're going to be using for this inventory that we're doing. So when we talk about that, what we just did to put it in the accounting terminology is we have beginning inventory of 3 t-shirts. So we're just using number of units here. Beginning inventory plus how many we purchased equals available for sale, okay? And then we subtract how many we sold, and we get our ending inventory. So there's a formula, but when you think about it, when we talk about these t-shirts, we can get to those numbers. So this isn't meant to be an overwhelming formula. It should feel pretty natural after a while, but have it beside you. You will need this. This one, and we can also switch the last 2 terms we're going to go to in just a minute. So this is one of the 2 fundamental things we need right now. Okay? So we have our beginning inventory plus our purchases equals our available for sale. Our beginning inventory plus our purchases, that's the most we can possibly sell. We can't sell any more than what we started with plus what we purchased. And then everything that we had available, at the end of the day, at the end of the period, it has to either be sold in our customer's hands or it has to be in our ending inventory. As an aside, inventory can disappear. People can steal inventory. Inventory can get broken. Inventory can theft. It can be lost. We know that. And that's a topic for another class, not our class, but another level. If you're an accounting major, you'll learn how to deal with inventory shrinkage. For our purposes, it would make it unnecessarily complicated. So we're assuming that there's no inventory theft. Inventory theft adds to cost of goods sold if you're curious, but that's definitely a topic that you would find in an accounting major class, but not as ours. So for our purposes, what we started with plus what we bought has to equals available for sale, and then all that stuff has to either be sold or it has to be an ending inventory. So it all works out. So now inventory example, another. So our same 3 t-shirts that we started with, we bought 2 more, and now let's say we have 1 left at the end of the year. So we have 1 left. How many did we sell? Well, we know we sold 4, right? So if we had 5, we have 1 left, we sold 4. So that gives rise to taking that same equation that we just had and just rearranging the bottom 2 terms. So we can take our beginning inventory plus our purchases, we get available for sale. That doesn't change. And now we can subtract ending inventory to get our cost of goods sold. So it works both ways. So what I've got here are the 2 formulas. It's just the last 2 terms are rearranged. This page right here contains the fundamental manipulation you'll need to do in a lot of cases here. So these are like the fundamental basic formulas. It's actually the same formula, just the last two terms are rearranged. Okay, so those formulas, you will need those throughout today. We will be using that over and over. So I'm going to put up a question now. Okay, this question, I'm sending it out. You will just enter your answer as a number, but we're saying beginning inventory is 10 units, 6 units are purchased during the period, and 2 units are sold. So how many units are in the ending inventory? Okay, so you have that question to answer now. I'm going to go back to here. So what we're doing, we're looking for how many units are in ending inventory. So what you're going to be doing is you're going to be applying this. You're given beginning inventory, you're given the number of units in beginning inventory, the number of units we purchased, minus the number of units sold will get you the number of units in ending inventory. So that's how you'll be answering this question. Right now, 99% right, so it's wonderful. Okay, so you're taking your beginning inventory plus your purchases minus the number of units sold. Okay, you want to get your answer in. I'm going to close it in about 10 seconds. Okay, so in this question, that answer would have been 14, 99% correct. So wonderful. That should be ending inventory plus your purchases minus your sold gives you 14 in ending inventory. Okay, so let's try another one. Okay, this one, beginning inventory is 12 units. 4 units are purchased during the period, and 3 units are in ending inventory. How many units were sold? Okay, so how many units were sold? What you're going to do there, you've got the question on your device. I'm coming back to the formulas. So we're looking for number of units sold. So you're looking to fill in right here. So you'll be filling in. You've got your beginning inventory, you have your purchase, and then you are given ending inventory. So you can solve for the one that's missing. If you do not have this written down, these formulas on this page written down, you'll need them. You'll need them for today. You'll need them for Wednesday. We will use them, and I won't be coming back to this page necessarily. Okay, so you have beginning inventory of 12 units, 4 units purchased, and 3 units in ending inventory. Applying the formula should come up with the answer. Yes. Yes. The question was, are these on the PowerPoints? And they are not the questions, but the formulas are, yes. Yes. Inventory, the question is examples of inventory. Inventory is anything that's offered for sale. So you go in a store, stores have inventory, you order things, it's things you buy or things that companies are selling. Okay, so how many units are sold? We're going to be closing this in about 10 seconds, so get your answer in. Whoever put a minus sign in front of your answer, there's no minus involved here. So you may want to re-enter your answer without a minus sign. Thank you. Okay, so the answer is 13. So there's 12 units beginning inventory plus the 4 purchase minus the 3 inventory units. Okay, so everything we've done to this point is number of units. So we've done this calculation. We could solve for ending inventory, or we can solve for how many units were sold. So this is number of units. So that's good. Now we're going to move into calculating the cost, because the end goal of all this that we're doing in this chapter is to come up with what was the cost of what we sold so we can calculate our net income, and what is our inventory worth so we can calculate our total assets on the balance sheet. So we need to know that. So to do that, we have to figure out the cost. So we're going to start with this first example. So we're going to start applying some dollars instead of just units. So assume t-shirts can be purchased for $10 each. It does not increase. So we are making this assumption that prices do not change for the sake of this slide only, okay? So let's assume costs don't change, and when we're talking about cost, we're talking about the company that owns the inventory, the company that's selling the product. So this is the t-shirt manufacturer or the t-shirt seller let's say they can purchase the t-shirts for $10. So they're selling them for some higher price. We're not dealing with the sales right now. We're dealing with the cost of this merchandise to the company. So it's a company standpoint. So the company has beginning inventory, 3 t-shirts, same example we've been using. Now we're putting dollars on it. So they cost $10 each. So the beginning inventory is $30, right? So we have 3 units at $10 each. The purchases, we purchased 2 more for $10 each, so $20. So my total available for sale in terms of dollars is $50, right? And then our ending inventory, we have $10 in ending inventory because we have 1 t-shirt. We sold 4 t-shirts at $10 each. So when we sold them for whatever selling price, but we sold them at a cost to us of $10 each, because we're dealing with the cost of our inventory and the cost of our sales. It's inventory and cost of goods sold. So what we end up with then is the beginning inventory plus the purchases equals $50 of cost of everything available for sale, and that will equal our ending inventory plus our cost of goods sold. That also equals $50. So the total cost of beginning inventory plus purchases will always equal the total cost of ending inventory and cost of goods sold, and we're going to see that later today too. Okay, so that's one of those things you need to know. The box in the corner here, total cost of beginning inventory plus purchases will always equal the total cost of ending inventory plus cost of goods sold. Okay, if costs never changed, if our t-shirt seller here could go on buying t-shirts for $10, the cost never ever changed, then we would be done with this chapter, okay? So we wouldn't have any need for most of the rest of this chapter. But the reality is costs change. The price of t-shirt fluctuates. The price of many things fluctuates. So I'm going to show you what the challenge becomes. So we're going to use our same example, but now we're assuming the cost of t-shirts can fluctuate. So our supplier changes the cost. And just for the sake of this example, let's say that our beginning inventory, we were able to purchase those for $10 each. But now when we made our purchases, the price has risen to $15 each. Okay, so now we have this question, our ending inventory. Should we value that 1 t-shirt that's left in ending inventory? Should we value it at $10? Should we value it at $15 or something in between? And then the number of units sold. When we sold those units, did we sell them, should we value them at $10 or $15? And that's the question that we answer with most of the rest of the chapter. How do we account for these ones? How do we cost the inventory, both the inventory that's left in our balance sheet and the stuff that we sold? And the answer is pretty important to companies. The answer of how we value that has a huge impact. The cost of goods sold is an expense on the income statement, so that will cause your income to be higher or lower depending on if you use the 10 or the 15. The cost of the inventory will make your assets be higher or lower, so this is a big deal. Companies will pick one method. We're going to go through 4 methods. Companies will pick one method and stick with it. And what method they pick, we'll talk about some on Wednesday. Today, what I'm going to do with the rest of today is we're going to walk through all 4 methods. We're going to use little numbers. We're going to walk through all 4 methods. On Wednesday, we'll talk about some of why the advantages of different methods, but companies pick a method and stick with it. The important thing is we don't want them picking $10 this year for the income statement and $15 next year and doing what's most convenient. That doesn't work. So companies pick a consistent method and stick with it. So we're going to go through all the methods, all 4 methods today, and we're going to start with the first one. So we're going to continue with our t-shirt example, and we're going to go through the 4 methods. So the first method we're going to talk about is specific identification method or specific unit method. And what this method does is it says, we have serial numbers. We can track each individual piece of inventory so we know what that one cost. So for our t-shirt example here, we are told that that 1 unit from beginning inventory is the one that's left. Okay? So someone tells us we have inventory tags. We know exactly what unit is left. Okay? So we know that with that beginning inventory one that's left is $10. So my beginning inventory, my total cost of my beginning inventory is $10 each times 3 units in beginning inventory. My purchases were $15 times 2 units, or $30. So my total cost available of everything I have for sale is $60. So now when I go to answer how much is ending inventory and how much is cost of goods sold, because that's the question I'm trying to answer over and over and over. How much is ending inventory? How much is cost of goods sold? My ending inventory is going to be, we know somebody told us that it was the 1 unit in beginning inventory. Okay, we've traced it back to there. So my ending inventory is 1 unit at $10. Then my cost of goods sold. Well, if that's the only one I have left, then I had to have sold 2 from beginning inventory, 2 from purchases, so 2 at $10, 2 at $15, giving me a total of $50 for cost of goods sold. So what we see here is we've got ending inventory of $10, cost of goods sold of $50, giving me $60, which is back to the total cost. Okay, so specific identification. It's probably the easiest one to understand. You can point to things and say, well, this one's left, and these were the ones sold. Great. But this does not work. First of all, if you have a product like Smarties candies, those little candies, there's no way they could point to one and say, well, this one's the one that's left. This is the other one that's left. They don't know. Even with t-shirts. Companies have thousands and thousands of inventory items. They don't know which specific t-shirt you got, and even if they could do that, that would be very costly to do. Specific unit method can only be used in certain circumstances. Typically, you can only use it if you can identify uniquely each item, and it's worthwhile cost-wise to track it. So examples of things that would use specific identification, you could do automobiles. They have serial numbers. They're fairly high cost items. Certain jewelers, if you're dealing with high-end jewelry, that's going to be uniquely identifiable. Things like that are big ticket items, uniquely identifiable. Other than that, specific unit probably can't be used for most companies. Okay, so then we move on to our next one. So our next method, we say, okay, well, let's do an average. Now, we can't just take our two prices and divide by 2 because we don't have equal quantities of each. So what we do is we do a weighted average method. And this method isn't bad either. What we're doing with the weighted average method is we say, okay, same set of facts. We have 3 t-shirts in beginning inventory that cost $10 each. We have 2 in purchases that cost $15 each. So our total cost in beginning inventory plus purchases is $60, okay? So that's not bad. So our total cost is $60. So all we're going to do now is we're going to say, well, what was our weighted average cost per unit? If our total cost was $60, and that was a total of 5 t-shirts, right? Because we had 3 in beginning inventory, 2 purchased. So if I take my 60, divide by those 5 units, I will get a weighted average cost of $12 each t-shirt. Okay, so $12 a t-shirt. Now I'm good. Now you tell me how many units I sold, and I could tell you the cost. I'll just take the $12 times the number sold. And you tell me how many units are ending in inventory, I can take the 12 times the number of units. So where I'm going with this, ending inventory, 12 units at $1, or 1 unit at $12 each, so $12. And then the number, I had 4 t-shirts sold at the $12, and I'll get 48. Now, the $12 ending inventory plus the 48 cost of goods sold equals 60. We're back to our total cost. So those will equal our beginning inventory plus our purchases will equal our ending inventory plus our cost of goods sold. Okay, what we're going to do now is I'm going to give you an example, and before I put it out, okay. So we are going to, in the space of our next hour together, we are going to do all 4 methods. We're going to use the same set of data. Every question I ask you is going to use the same set of data. So, or we're going to do 3 methods. We're not doing specific identification. So we're going to do weighted average, and then we're going to do FIFO and LIFO, which are coming up. So the facts, these are given to you. The beginning inventory is 10 units at $12 each. You may, on the side, want to note that 10 times 12 is 120. Usually we'll use that later. That's not an answer, but it's part of an answer. Purchases, we purchased 5 units at $15 each. Just as a note, you want to do 5 times 15 is 75. Just note that later. Okay? And there's 7 units left in ending inventory. Okay, so that's the information we're given. Now we're going to answer a set of questions. And that same set of information that I just gave you is going to be the same over and over and over. The facts are the same. So let's just go back to beginning inventory. You had beginning inventory $120, right? I don't have it written on here. And I have purchases of 75, 5 times 15. So if I add those 2 together, that's what? 195? 195, okay? Write the 195 off to the side. That's your total cost of goods available for sale. That doesn't change no matter what method we're using. That 195 is going to be the answer this morning every time I ask you for this set of facts. What's the cost of goods available for sale? It's 195. Okay, so let's do this. First question though. How many units were sold in December? Now, how many units were sold in December? Remember that the equations that I told you you would need today? This is our chance to apply it. You're basically going to take beginning inventory plus purchases minus ending inventory. So beginning inventory plus purchases minus ending inventory. Okay, I'm getting a wide variety of answers. The majority are right. So when we're talking about this, okay, the formula that we're using, referring back to your notes, we had beginning inventory. In this case, 10 units. Okay, remember when I'm asking how many units, you do not use dollars. You're using only units. So beginning inventory is 10 units, purchases were 5 units, and ending inventory is 7 units. So when we're doing that, we're taking the 10 plus the 5 minus the 7. I'm going to close this question in about probably 10 seconds or so. So 8, okay? Okay, so in your notes, mark down 8 because you're going to see it again, okay? So the number of units sold is 8. Now the next question coming up, so the bottom part, the 8's going to disappear. So you just need to know that that's the number of units sold. I'm going to leave this. The next question coming up, which I'm not going to send out right this minute until I talk about it, is what's the weighted average cost per unit? The weighted average cost per unit, that formula that we just went through is you take your total cost of goods available for sale, which we just did, right? When I said write down the 120 and the 75, we just got the total goods available for sale. You want to divide that by the number of the number of units available for sale. So the units available for sale, the units is going to be the 10 plus the 15, right? Okay. So your weighted average cost per unit is your total cost of goods available for sale divided by the number of units available for sale. No, it's the number of units available. So your goods that are available is your beginning inventory plus your purchases. Okay, you want to make sure you don't put a dollar sign. There's one person that has a dollar sign in their answer, and your answer is otherwise right. So get rid of the dollar sign. Re-enter your answer without the dollar sign. Thank you. Okay, again, on this one, I'm going to close it in about 10 seconds. I've got a wide variety of answers. Weighted average cost per unit. You're going to have to do a little math, but the weighted average cost per unit is the total cost of goods available for sale. So the total cost of goods available for sale we did at the beginning when we introduced this question. So that was the 195 that you had. And then you would divide that by the number of units available for sale. The number of units available for sale would be the 10 plus the 5, or the 15. So you take the 195, divide by the 15. I'm going to close this question in about 10 seconds. Okay, weighted average cost per unit is the 195 divided by the 15. So the 15 is the 10 units plus the 5, but the 195 is the 10 units of beginning inventory at $12 each, plus the purchases of 5 units at 15. So 195 divided by 15 gives us a weighted average cost per unit of 13. Okay, so again, in your notes, just giving you a heads up here, that 13, you need it for the next question, okay? So the next question coming up, before I push it out to everyone, is what's the value of ending inventory? So under the weighted average method, you're going to take the number of units in ending inventory, which you're given, right? You're given 7 units in ending inventory, and you're going to multiply it by the weighted average cost per unit. So basically you're saying I have 7 units, and the weighted average cost per unit we just calculated is 13. So you're just saying what's the value of that ending inventory then? You have 7 units at $13 each. So I'm going to push that question out. A nice, easy one. Again, you're going to take the 7 units of ending inventory times that weighted average cost of 13. Do you have a question? Do you have a question? Yeah. That would be what's on the screen, yeah. I didn't mean to. I was just saying sometimes it's easier to see it than to hear it. Okay, 10 seconds left, and I'm going to close it. Okay, now, the third question, or the next question coming up, cost of goods sold. Okay, cost of goods sold is going to work similarly to value of ending inventory. You're going to take the $13 times the number of units sold. Okay? So just as a refresher, how many units did we sell? No. 8. We sold 8 units. That's what we calculated in the very beginning. So we sold 8 units. You've got a $13 weighted average cost. So you'll be doing 8 units at $13. Okay, about 10 more seconds on this one. Wow, I can't close it because it's not open. Okay, I was going, wow, 96% of you have it right. That was the last one. Sorry about that. Oops. Okay. Well, now 10 seconds, right? There you go. 98% right now. Great. Get rid of the dollar sign. Someone just entered it with the dollar sign. Re-enter it without the dollar sign, please. Thank you. Rule of thumb, I'm not always going to announce dollar signs. Don't use dollar signs in your answer. They're wrong. I will not announce it every time. Today it's just kind of a friendly reminder. No dollar signs in Learning Catalytics. Okay, 10 more seconds. Cost of goods sold is your 8 units sold times the weighted average cost. I didn't know if that was. Okay, so our answer is 104, which, whoops, didn't mean to leave that. Okay, so that's the $13 times the 8 units, okay? So those are weighted average. Now, weighted average is the second of the 4 methods. So we have specific unit, which can only be used in specific circumstances, and we have weighted average. So next up, we're going to start with the next method, which is FIFO. So the 4 methods are specific unit or specific identification, weighted average, FIFO, and LIFO. So we're going to do FIFO, then we're going to do LIFO, and then we'll practice them again on Wednesday. So our same first example with the t-shirts, now we're doing FIFO. FIFO stands for first in, first out. It refers to the units that you're selling. So FIFO says your oldest units are sold first. Okay? So you sell those oldest units first, So therefore, your newest units are your units in ending inventory. Okay? So going back to our t-shirt example, just want to say that, okay, so the cost of units sold. Under our t-shirt example, we sold 4 units. So under FIFO, we're saying those 4 units were our oldest units. So our first units in are the first ones we sell. So under FIFO, we sold 4 units. So that means 3 of the units had to be from beginning inventory because those are our oldest units. So FIFO, we're going with the selling the oldest units. But we only had 3 units in beginning inventory and we sold 4 units. So we also sold 1 t-shirt from the purchases. So we had 1 unit at $15 because FIFO, we sell our oldest units first. We sold 4 total. So we sold all 3 from beginning inventory, and then we had to sell 1 from purchases. So that means then our total cost of what we sold under FIFO is $45. So FIFO refers to selling those oldest units first. And our oldest units are the ones in beginning inventory. We sold a total of 4 units, so we sold 3 from beginning inventory. That was all we had in beginning inventory. And then we sold 1 from purchases for the other. So our cost of goods sold is $45 under FIFO. So then ending inventory under FIFO is going to be that 1 left over in purchases. So we have 1 at 15, and so so what we end up with is ending inventory is $15, cost of goods sold is $45. That gives us total cost of $60. So we have 15, the 45, and that equals our total cost. The beginning of the inventory plus purchases has to equal ending inventory plus cost of goods sold, and we're there. Now, a faster way, notice that if I get, say for example, cost of goods sold of 45, I could take my 60 total cost, subtract 45, and I get to the ending inventory. If you know your total cost of goods available and you calculate your either one, the cost of goods sold or the ending inventory, the other one has to be the difference. We'll see that coming up here. So FIFO, the big key with FIFO is that your ending inventory, your first ones in are your first ones sold, which means you're selling your oldest ones first. Okay, so back to the same exact set of data, okay? So same set of data, just as a refresher, your total cost of goods available for sale here is $195, right? We know this is the same thing that we just did. You want to make this note in your notes because you're going to see it here in a minute. But 10 units at $12 each is $120. 5 units in purchases at $15 each is $75. So if I take 120 plus 75, that gives me $195. $195 is the total cost of goods available for sale. Okay? That doesn't change. That will be the same. If I ask you what is the total cost of goods available for sale under LIFO, you wouldn't even have to say we haven't covered LIFO yet. It will be $195. $195, the beginning inventory plus the purchases, the dollar values there will be the same under all the methods. So $195 is our cost of goods available for sale under all the methods. Okay, so that was just a refresher on what we've already done, right? We know that we know the cost of goods available for sale is $195. That's our beginning inventory plus our purchases. So here's your gimme question for the day. Okay. Okay, what is the total cost of inventory available for sale? Total cost of inventory available for sale is always your beginning inventory plus your purchases. done. It'll be the same no matter what method we're using. It's the cost of your beginning inventory plus the cost of your purchases. We said beginning inventory was $120. Purchases were $75. So if you add those two together, you get to the answer. I'm going to be closing this one in about 10 seconds. So you want to make sure you get your answer in. Now, you're going to see this question again when we get to LIFO. I'm going to ask you what's the total cost of inventory available for sale. And the answer is going to be the same. So I could put up what's the total cost right now. What's the total cost of inventory available for sale under LIFO? And you could still answer. It'll be the same answer. It's always your beginning inventory plus your purchases. Okay, so now is where it gets different. So now our next question is, what is cost of goods sold? Okay, so let's walk through the cost of goods sold. Cost of goods sold under FIFO. First thing, FIFO means my first one in or my first one sold. That tells me I sell my oldest ones first. So how many units did I sell? I sold 8 units, right? I sold 8 units. So under FIFO, those are my oldest units. So my oldest units are always beginning inventory. I see I had 10 units in beginning inventory, right? So I sold 8 units. They were out of beginning inventory. Beginning inventory has a cost of $12 each. So I sold 8 units at $12 each. So what we're going to see here is we're going to see so 8 at $12 each. So we have 8 units, cost of goods sold. We're looking for the cost of those 8 units we sold. Under FIFO, our first units in, the first units that we have are the first ones sold. So that would be our beginning inventory. So we go back to beginning inventory. They were $12 each. There were plenty of them in there. Those 8 units could all come from beginning inventory because there were plenty in beginning inventory. So we have the 8 times the 12. We're going to close this in about 10 seconds, so make sure you have your answer in. It's 8 times 12. Okay. About 5 seconds left. It is the 8 times 12. Okay, now, ending inventory. Again, before I push the question out, we'll talk through it. This one is really easy to get when you have the other 2 answers on the screen here, okay? If our total cost of goods available is $195, so that's the cost of everything we had sitting there waiting to be sold. So we have $195. We know that $96 of it was sold. So we have $195. 96 of that $195 was sold. The rest has to be ending inventory. That's the easiest way to do this one. If you have your total cost of goods available and you have cost of goods sold, you can subtract to get ending inventory. That will be the easiest way on this one. Okay, so now the question's out there. Okay, I'm going to show you this one because I want to show you 2 ways. Now, the method that I just showed you at the top is the 195 minus 96. So we're taking the total available minus the cost of goods sold gives us a 99. The other way we could have done it, if we're trying to get ending inventory, under FIFO, if we're selling our oldest units, that means our ending inventory has to be our newest units. So our ending inventory, we have 7 units left in ending inventory. So that has to be our newest units under FIFO. So 7 units, I go to my purchases are my newest units. I have 5 units I purchased at $15. So I would have all 5 of those still in ending inventory. So I'd have 5 at 15, and then there's 2 more from beginning inventory. So I could do it by taking the 5 times the 15 for the purchases and then taking 2 out of beginning inventory at the 12 to get us to 99. But usually it's easier to go, once you have the total cost available and you have cost of goods sold or ending inventory, take the difference for the other one. Okay, now we're going to be doing LIFO next. So we just left FIFO. Again, on Wednesday we'll talk a little bit about why companies pick a method, but once they pick a method, they stick with it. So we're going to do LIFO next. Some things to note. We're going to see this problem again coming up, and one of my questions will be, what's the total cost of inventory available for sale? Okay, I won't put it up. I won't tell you ahead of time, but you know it's got to be $195, right? It's the same across all methods. Okay, so that's just your heads up coming up. Okay, so let's go back to our t-shirt example for the moment, and now we're going to do LIFO. LIFO means our last units in are our first ones out. Okay, so it simply means that the last units we purchased are the first ones we're selling. All of these assumptions, when we're talking FIFO or LIFO, they are simply accounting assumptions about the flow of cost, so that we can consistently apply it across everything. So it doesn't necessarily refer to how we sell our products. This is the consistent assumption that the company uses. So LIFO, last in, first out, means our most recent units are the ones we sell first. So our ending inventory is our earliest unit. So it's kind of opposite. It is opposite of FIFO. Okay, so our t-shirt example. Same example we've had where our total cost is $60. Okay, so that's our beginning inventory plus our purchases. Now, we are saying cost of goods sold. Cost of goods sold under LIFO means that we're selling our most recent purchases, our most recent goods first. So that means we sell the purchases. So we bought 2 t-shirts, so we sold both of those, and then we sold 2 from beginning inventory to get to our total 4 that we sold. So our cost of goods sold under LIFO is $50. So again, LIFO, we're saying last in, first out means we're selling our newest items. Our newest items are purchases. We use up all of those. We have to go back and grab 2 from beginning inventory. So total cost of goods sold $50. Ending inventory, that 1 t-shirt under LIFO, if our most recent goods are sold first, our ending inventory has to be our earliest beginning inventory. Okay, so we have $10 for ending inventory under LIFO. We have $50 for cost of goods sold. Combined, it's $60, which equals our beginning inventory plus our purchases. The key with companies is they choose one method and they stick with it. It's consistent application, and it doesn't allow for manipulation of earnings. If we allowed companies to say, oh, those were $10, these were $15, they can manipulate earnings, and basically your income statement and your balance sheet would mean nothing. So they have to choose a method and stay with it. And if they change methods, then they disclose that. So what we're going to do right now is we're going to try LIFO. Okay, so same set of facts, and the question that I told you was coming up. Okay. Okay. So what is the total cost of inventory available for sale? I just got 195 answers in the first 5 seconds. It's great. Okay. Total cost of inventory available for sale. Again, get your answer in. I'm going to close this question fairly soon. Total cost of inventory available for sale is always your beginning inventory plus your purchases. And again, you don't have to do any calculations on this one if you've been taking notes. Okay, closing soon. Just so you know what I see like a Pac-Man, and the more people that answer, its mouth is closing. So we're almost at the closing point here. So, okay, we're out of time now. Okay, so the 195, as we said, it does not matter. I can ask you any method, and the total cost of inventory available for sale will always be the same. It's your beginning inventory plus your purchases. Okay, next question. Under LIFO, what is ending inventory? So under LIFO, what is ending inventory? Okay, so if you think about LIFO, so if we think about, go ahead and give it a try. LIFO means the last ones in are the first one out. So you're selling your newest stuff. So your oldest stuff is an ending inventory. So the question is asking what's an ending inventory. LIFO, you're selling your newer stuff. Your older stuff's in ending inventory. Okay, questions out there? Okay, under LIFO. Okay, so LIFO means, first of all, when we're doing this one, ending inventory, first thing to do is say, how many units of ending inventory do I have? I have 7, right? You have 7 units. So 7 is part of the calculation. So you want to have 7, and you're going to multiply it by something. Now, LIFO means our last, this is how I think of it, and I actually write it down in the margins because it's so easy to get turned around. LIFO, last one's in, our first one out. So that means my newest ones are sold first. Ending inventory then has to be the oldest ones. So ending inventory, oldest ones. My oldest ones are beginning inventory. Beginning inventory. So beginning inventory, there were 10 units in beginning inventory. I only have 7 in ending inventory, so they're all coming from beginning inventory. So when I talk about my value of ending, my cost of ending inventory, it's going to be 7 units at the $12 cost. Okay? Okay? So again, when you're getting this answer, what you're going to be doing is you're going to be taking 7 units at $12. So 7 times 12. Okay? So when I say at, it's times. So 7 times 12 is going to be your ending inventory. And I would say this inventory stuff, it's something that you'll have to sit down when it's quiet and step through it and work through it. And remember that what we're doing right now is recorded. You can go back and step through it step by step if you need to. We'll do some more practice on Wednesday as well. But this one I'm closing in 10 seconds. Do you have questions up there? Your questions here? Do you have questions? Okay, so one next question. Okay, what's the cost of goods sold? Now at this point, with everything's on our screen, this is a very easy answer because we have the total cost available of goods available for sale. So everything that we had available to us to sell was cost $195. Now that $195 has to end up as ending inventory or cost of goods sold. So we have $195. We already know that $84 is ending inventory. So $195, $84 of it is ending inventory. The difference, the remainder, is cost of goods sold. Okay, so cost of goods sold in this case is going to be the difference between your total cost of all your goods available is $195. We're saying 84 of it is ending inventory. The difference has to be cost of goods sold. So what you're going to see here, you're going to get your answer in, missing a few people here. So you've got probably about another 10 seconds or so to get your answer in. But your cost of goods sold is going to be that $195 minus the 84. So that's where you're going with this, because that total cost of goods available for sale has to either be ending inventory or cost of goods sold when it's all done. So if you know one, you can subtract to get the other. Okay. Last chance. Okay, so for this last question, note that you could do it the difference, which is the easiest way. Once in a while, if you don't have the difference, you have to do it. When we're talking about cost of goods sold under LIFO, that means we're selling our most recent stuff first. So if we sold 8 units, that means we had to have sold all 5 units from purchases. So we would have had 5 of 15, and then we would have had to sell 3 from beginning inventory to make up our total 8. So it still comes up with 111. Again, this topic does take time. You need to walk through it slowly, and know that you can come back and review the recording if you wish. We will also practice it on Wednesday. Those formulas that we went over today, you will need them in class on Wednesday. And that's all I have, and I will see you on Wednesday.